welcome back to Golden Rule Radio. We appreciate you stopping by as always. And this week, we got Robert back from a nice trip that he took to Topeka, Kansas for the Kansas Prayer Breakfast that McElvaney was speaking at. And Eric is joining us again this week. So without further ado, we're going to jump right into the charts, following up on last week's non-Fed announcement that Eric and Rob McLaughlin and I discussed. So guys, what do you think? Gold action, gold inching back down after popping up after the Fed announcement. Where do we think we're going?
It's been a couple weeks, so it's nice to be back. Starting around the first of the year, we started to create a little bit of divergence with the gold chart. Gold price moving up, the relative strength index coming down on a trend line, and we saw the pullback we were looking for into the 1280s. We've since moved back up into the 1320s with gold a couple days ago, and I think it finished a little pattern there at 1320, 21, 22. I think it needed to get above about 1325 to really have more legs to this up move. So it's not surprising to see it down to about 1310 today, and wouldn't be surprising to see it pull back a little bit more.
Yeah, we're building what may be a nice little head and shoulders pattern. You know, coming off the divergence you mentioned on the daily chart, wasn't surprising to see that pullback. I do like the fact that gold stayed above the previous low going back to earlier this year. You know, we had that low down to around 1275, 1280. We have stayed above it, bounced back up. But yeah, couldn't seem to push past 1325. So this next week should be telling for gold. I still think there's a good chance that we push back up and test the old highs, 1360-ish. And then obviously that would be pretty arguably bullish, since the previous pullback, each one over the last couple years, has been much more shallow than the previous. However, if this little short-term head and shoulders pans out, then we're probably looking at pricing back down into the high 1200s, as Robert suggested, and that's going to offer some pretty strong buying opportunities, especially with a decreased forecast on the U.S. economy coming up. It could be a pretty rough year domestically in the U.S. economy, and obviously as this consolidation we all talked about last week continues to build, anytime you can get into the metal sub 13, we're happy.
Yeah, gold's ultimately headed higher and going to break that previous high around 1365. But we're just talking about what it's doing in the meantime. You can't seem to figure out exactly which direction it wants to go, just kind of like the U.S. dollar, up a little bit, down a little bit, same range that it's been trading in. So the breakout above 1365 will be bullish. That is what we're expecting in the next year or so. But in the meantime, you know, it's just bouncing around here around this 1300, building a pretty nice base.
Sure, it's a week-to-week show. I mean, we got to talk about the short term as well as the long term.
Yeah, and while gold can't really seem to figure out what it's doing, it seems as though Palladium has decided what it's doing. And last week as we sat here, we had Palladium at about $1,600 an ounce, and Miles said that he felt like it had topped out. And since then, today alone, Palladium's down about $99 an ounce. We're right around $1,427. So, Miles, do you feel like this is the direction Palladium's going to go, and are we going to see it continue to go down, or is this just another little correction for another larger step up?
Well, I love patting myself on the back, so let's all forget when I thought 1450 was the stopping point, and we went another 150 higher. But I did like that 1450 number because of some of that extrapolated fibs we did on the show about a month ago. So seeing it come back to that level certainly puts a smile on my face. We've been talking about Palladium for a while. I think it's in panic phase right now, and I continue to argue we're going to have somewhat of a blow-off, or at the very least, platinum starts to play catch-up, and I think that is starting to happen.
You know, had that baseline trend along the bottom there that we watched it bounce off of a number of times at the end of this last year and beginning of this year, and it's been moving higher. It's been flirting with that 875 number and pulling back a little bit today, but I think platinum is ready to move. We've been recommending it for a while on the show because of the ratio, and we're going to still recommend it because of the price is $300, $400 below the price of gold. That is an anomaly.
Yeah, and on that ratio, Robert, we had, just in 1 week, we saw the platinum palladium ratio go from about 1.9 down to 1.6, and that's with platinum being somewhat stagnant, but all it takes, as we've mentioned over and over on the show, it's one metal moving in an extreme towards another metal. So platinum doesn't have to be going up, $100 while palladium's going down. That is still shrinking the ratio.
Once it breaks above this previous high of about 875, it's going to run. Moving on to silver. Silver's been soft, just like gold has a little bit, but gold's been a little stronger. The gold divided by silver ratio is pushed up almost to 86. I mean, we're still in this territory above 80 in the mid 80s, where the gold silver ratio hasn't really stretched higher than the mid 80s. I think 88 being the high. So we're going to still recommend silver here. It's a good play. I can't believe it's under $20.
Yeah, I really like 1620 on the chart right now. We've hit it twice. We're building what looks like an inverse head and shoulders pattern. So we could be kind of stair-stepping up, maybe build a little divergence up to that 1620 mark, finish out that head and shoulders with one last, return back down sub 16 where we're at now, and then pushing up to some highs we haven't seen since last year. So that's my short-term outlook on silver for the next month or so. We'll see if that plays out the way I think it might, but I think the numbers look good. And again, with some concern on the Dow, with gold reaching some higher prices, silver becomes far more enticing. It doesn't take a lot of investment interest to end up pushing the markets up, especially in the physical metals. So keep an eye on silver. Don't know how many more times we can say it. When it moves quickly. You know, the swing from gold to silver happened very fast, about a 9-month period back in 2010, and you wanted to make sure you were already in and ready for that type of ratio trade move.
So that covers the action we've seen in the metals this week, but let's move on to what's kind of been dominating the headlines this week, and that is the inversion of the yield curve. You know, this is one of the great signs that a recession is looming. We saw this happen in late 2018, then it went away. We had another rally. Now we saw it again on Friday. Keep in mind that before the financial crisis of 2008, we saw this same indicator flash in 2005, 2006, and then again in 2007 before anything happened in 2008. My question to you, Miles, would be, you know, other than safe haven buying from people panicking and selling out of their stocks and coming into this, will we see any other effect on the metals prices from this signal?
Eric, you would certainly assume so. I mean, the yield curve is going to do with treasury buying as well as borrowing going into the equities market. And if you're seeing a slowdown there, certainly from the general public who may be lagging in their ability to put additional resources into those markets, or from other nations buying up our debt, you definitely would expect to see maybe some panic selling. Possibly some panic buying into the metals. I mean, obviously, we see that swing eventually, right? I mean, eventually you finish the consolidation. There's some event that triggers a push over towards safety assets like metals. So again, all of these things are just coming together at a head. You know, you have a number of threads on the sweater that are all getting pulled at the same time. As interest rates continue to stagnate, or even worse, they look at lowering interest rates because the Dow, after the massive crash we took in November, December last year, is still incapable of getting to those old highs. They may start looking at lowering interest rates again, so they're walking a pretty rough tightrope right now. Do we raise interest rates to make the dollar more enticing overseas to international investors and get the yield curve back up? Or do we lower interest rates to try to save the pensions and the retirement accounts and the investment accounts of the American public by giving the banks and brokerage firms the leverage to go borrow and reinvest back into the markets? So it's kind of a rock and a hard place position that the Fed's stuck in right now. And I think that could inevitably end up leading to recession and possibly another similar crash and or depression like we saw 10 or 11 years ago. So speaking of the equities market inability to get back up,
it's definitely gotten back up, almost to the previous high, but it failed short of it. The bounce that we've had in the equities market has brought us back up towards the old high, but it has failed to break to a new high, and we'll see if that turns out to be significant. Currently kind of in a consolidating pennant pattern. And, you know, it makes me wonder as we finish the month of March going into April, the old adage, sell in May and go away. Is that going to play out to be true? And will that be front run? Meaning not necessarily selling in May, but maybe selling in April leading up to May, which shows that the equities market may not break to a new high. That would be my guess, is that we're not going to have the equities market breaking to a new high. So it would have to have some positive action from here to be able to do that and get wind behind the sails. So the bounce that we've seen since late December isn't necessarily turning the market bullish. And if you look at the Dow Transportation Average, it has failed to break to a new high as well and has struggled So you don't have a bull market confirmation yet, and you may not in the equities market. So time will tell. We'll watch this closely to see if this is possibly the rollover period. But yeah, the old saying, sell in May and go away, is starting to rattle around in my head.
Sure, and that confirmation on the transports, I agree, is quite significant. So either way, I think we're going to have our answer in the next week or two. You see this compression building since about March on the Dow. And I think that that's going to come to a head here in the next couple weeks, and we'll get a breakout one direction or the other. So pay attention to the Dow. The dollar leads the Dow. The dollar leads gold. The dollar's stagnant right now, not really going anywhere. Yield curves are down. The Dow is trying its absolute best to get back up to those old highs and failing. And in the meantime, gold, silver, platinum, and even to some extent, granted the last action over the last week in Palladium has not been the case, but it does appear all of the commodities are just continuing to clip higher.
So that's going to do it this week for Golden Rule Radio. Thanks for listening as always. You can find us on Twitter at ICA Gold or Facebook under McIlvaney Financial.
You can call us at 800-525-9556. Our website is McIlvaney.com. Thanks for listening. Have a great week.